Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for one wild trading day on this Tuesday, November 30th, 2021. It's about 6:50 p.m. All right. Today was the day where we started off with the Moderna chair being interviewed by the Financial Times. I don't know where he was speaking from. And he came out with a different take on the Omicron than the Pfizer chair, saying that he thought it would be a big drop in the efficacy rate. Now, yesterday when we saw the Pfizer chair speaking about it, he didn't know what number. He expected a lower number on the protection rate, let's call it that. Was it going to be 80, 75, 70, under 70? You have to do a booster. It didn't even sound like you'd get to that number with the Moderna chair. Whether that was his intent or not, I haven't the slightest idea. But if you got up at 3, 4 in the morning like I do to watch the markets Chicago time and take a sneak look, you saw you were down 400 points or so, because I remember rubbing my eyes going, is that real? And I couldn't figure out what was going on, but I get up anyways in about a half hour from then, and I said, I'll just read about it at that point. Nothing I could do to panic at that point. And that's what had taken place. Okay, so you came in and early in the morning, everything was under assault. At 9 o'clock this morning, Fed Chair Powell and Treasury Secretary Yellen then spoke before the Senate Banking Committee. And in the prepared text, Mr. Powell, if you read it yesterday, because it was given out, it was readily available, he was talking about the idea that, yes, they're going to discuss accelerating the tapering, but the variant, the COVID variant, was very concerning. Well, today, that concern on the COVID variant went out the window. I don't know if that was his intent or not, but he said, no. Inflation is rough. We've got to throw out the transitory term on inflation. So for those of you that argued, rightly so, that inflation wasn't transitory, it would take longer to see what that is, he threw that towel in. The European Union still thinks it's transitory, by the way, and so do many other central bankers. And then he said they're going to discuss the acceleration, maybe by a lot more. And I'm giving you what I heard, I watched the whole thing, of the tapering. So maybe you're talking February, March, so $30 billion a month you'd start tapering instead of the $15 billion. Well, that's what the market needed to hear to keep the break going. At first the market went up, and then the market went the other way. I happen to view this with a, we now know where the Fed is. There's no guessing where they're at. It's going to take something exceptionally bad with this COVID variant to make the Fed go on hold. So that's where you're at. They want to, they will, and they're going to do faster tapering the first opportunity they get. The market's building that into the prices already. That's important to understand. Getting this out of the way is a boon. It is not a run out and buy the things instantly. The market's got to work this into it, and it happens very quickly. But that's, I think, where you're at and everything. So those are two events that I'm looking at in the marketplace. When you look at Tesla, you still have almost a triangle. You can almost envision drawing a line there and a line up here. And that's the type of pattern that we seem to be trading in. It's one of the few stocks that were up today, and it was up 0.68%. You have a pattern of a higher high and a lower low. The market is staying and trading pretty close to the 18-day average of closes, not getting away from it just yet. It's caught between a wide berth of the lower and higher Bollinger Band and momentum up. So you don't have a trend because you don't have higher highs, higher lows. So you're out of that, but you do have upside bias and momentum pointing up. Support 110.0775. You get into trouble in this market if you were to get back under 1062. That opens the door for the lower band. Barring that, you got to fight your way to the upside. Apple, another stellar performer today, probably the strongest in the marketplace. I know I saw it on that list, up 3%. And we talked that, hey, this thing's good, but I think it's now in trouble up at the upper Bollinger Band. I look for the pros to take money off the table. I know you're going to say, nah, it was so strong today, that's it. I'll stay with what I teach. And what I teach is when you get to an upper Bollinger Band in an overbought condition, markets start running into resistance. When you look at ARK, and I know that Kathy Woods is going to be on tomorrow. I think she's on, I don't know if it's CNBC or Bloomberg. I was flipping all day between the two. And she's got to be talking about how poorly her fund is done and what she's going to do to resurrect it for next year. This year's a lost cause for her. You have a pattern here now of a higher high and a lower low with an embedded reading. I told you, I thought on the rallies yesterday it would get sold. It's exactly what happened today. And until you lose that embedded reading, I can see it dropping away. The industrial sector is getting smashed. The idea of higher interest rates and the Omicron, that is serious stuff that you have to keep your eye on. Is it overdone? In my mind it is, but I'm not a bottom picker. I look at the idea that you're under the Bollinger Band. That's enough reason that I don't like being short. Now you're down to key moving averages. You slice through them. Will you keep slicing? You could, but the odds don't favor it. When you look at the semiconductor, I haven't changed my opinion at all. The market backed off today. I think you're caught in these Bollinger Bands, and that's where I think you're going to stay. I love the business of the semiconductor. I love when you have shortages and you have pricing power. Obviously, if the factories can't be open, that's a problem. But you realize that what demand is going to be for these, again, if people don't go back to the offices, the computers, everything, it's going to go crazy one more time. In CNBS, the cannabis can't get out of its own way. It just keeps working itself lower. Our work has been right on the money on it. It's an embedded reading. Rallies in the market will continue to get sold, and the short covering will happen, in my opinion, when you get a reading over 21 in the slow stochastic. Barring that, the rallies get sold up here, and I think the pros are looking to take partial profits at the lower band. The difference there in partial and all money off a table is whether you're embedded or not in the slow stochastic, the way that I teach, again, charting. The home builders got smashed today. So they had been fighting a battle, and they lost it today on interest rates, okay? So here's the market, and boom, look what you do on the interest rate play, which makes sense, okay? You know, high interest rates are going to scare the heck out of everybody, all right? So there are parts of it that you've got to look. Now, what's a high interest rate is going to be a relative term as well. But the initial reaction down, you might want to go into a washout mode down to the 79.20 level. The resistance on rallies will be the 82.23 level, but you have done damage here. Even with the pending home sales showing home prices up month over month, I think it was 20%. The price, it's crazy. It's just really strong. Okay, XLE, lower highs, lower lows, oversold, going into OPEC. Again, you keep hitting the lower band, you eke out a slightly lower low, and then you rally. That's the game there. I don't see it locking in and staying that low for long. Emerging markets destroyed. Now that the Fed said U.S. interest rates going up, destroyed. So we have to look back at this as a broad top. I know traders say, it's a buying opportunity. I don't know. I think you got to look at this distribution here as a top, but it's very oversold. It is certainly not something that I'm telling people to sell here. If anything, I want to be clear. Anything in the bottom of that Bollinger Band, I'm telling you, all the charts, I think it's time, most of them, if they're not embedded, to be sidelined. And that's not a trade recommendation. That's a chart observation, okay? Very big difference. I don't want to make recommendations here. I want to give observations. Very big difference. In this market, the one thing I said this morning when I did my morning flash update, I think if you go back, I said each time gold starts off strong, it's like the kiss of death. And for gold, if you think about it, this is the dream. You got inflation picking up again. You got a strong economy with it. It should be a market that comes alive. It just doesn't want to do it. This is a new low on that move. It's getting uglier and uglier. The weekly charts don't look like the daily. I want to make that clear. Stay with the game plan I gave you on the weeklies. if you're a weekly trader, obviously. Higher high, lower low. I'm going to view today's highs for the next 2 days in gold and GDX is very crucial because you have outside days. If you take out those highs, it's probably a signal you're through with this washout phase. Barring that, the open door to the lower Bollinger Bands is there. COPEX, which is the copper, I think it's just going to be caught here for a bit. It's hard for me to want to get bearish copper if you think world economies are picking up and staying in pretty good shape. So you have to play it. But selling against the Bollinger Band, I never teach to do that. TLT, what do you do the first time you hit an upper Bollinger Band? When you're overbought. So long, folks. Take your money off the table is what I teach. In FXE, against the 18-day average. So you had your rally. Now, when you have an embedded reading, which you had right through here, and you lose it like you did today, the goal is the 18-day average of closes. How close did we get? We got within 9 cents. I think that's a pretty good call. We'll see if it can just get up there. I'm laughing at it because of what it's doing, but I think it's so important that the market's doing this, and we get to see just how it's all working out. So to me, very important action, and we'll see where the markets want to play that through. I want to remind you that this is the Cyber Week event for us, where we offer, if you take a 1-year subscription, let's say to my Spider ETF morning subscriber video, not expensive for a year, it's like $160 or so. You can choose from my free charting course or my enhanced Bollinger Band course. So a new subscription to that will get you that going. Pretty simple. Now, your choice. You can give it away as a gift. You can learn from it. You tell us when you want the course to start. We'll take it the rest of the package way for you. How do you get this and how do you sign up for it? Because it's not on the website. Well, how you do it is you're going to take your cursor and you're going to move it up, and when you do to the top, you're going to see an icon appear. Click on the icon, fill out the forms, choose what you want, and away you go. Can I make it any easier? Buy yourself a Christmas gift, and then you got a learning gift on top of it. I'm Ira Epstein. See you tomorrow. Have a great trading day tomorrow. Take care.